Hey guys, it's Aman
and Christina
from Our Rich Journey. Is the stock market on its way to a huge crash? This is the question that is on the minds of so many people after all that is going on in the stock market. It all started last Black Friday when the stock market, the Dow Jones, fell over 900 points. On that same day, the S&P and the NASDAQ fell by more than 2%. And every day after that, the stock market has been on these wild swings. But is this just a precursor to an inevitable crash that is coming right now? That is the question that we are going to answer in this video.
So in other words, we are going to be discussing whether this is the start of a crash that is going down, 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 and if so, what you should do about it. People have money sitting on the sidelines and they're not sure whether this stock market is going to continue to go up or if it's bottoming out soon. So we're gonna talk about that in this video. But first, if you are new to our channel is all about making, saving, and investing money on the road to financial independence. Aman and I pursued financial independence for 8 years. We reached our goal and quit our jobs before the age of 40. So if you are interested in learning more ways about making, saving, and investing money, make sure you subscribe to our channel, follow us on Instagram, and check out our blog at ourrichjourney.com.
So for the last 5 days, the stock market has experienced the most volatility it has had in over a year. The stock market has moved more than 1% in either direction. And so one can't help but ask the question, is this the start of a crash? And so in order to answer that question, we have to get a couple things straight. The first thing is that crashes are bound to happen. It's just a matter of time. Now, this fact can consume a lot of investors, especially investors that just start putting money in the market because they're afraid they're gonna put their money in and then immediately the stock market crashes. But if you are a long-term investor, you may have gone through moments like this, and so you know exactly how to handle the inevitable crashes. But for anyone that is investing in the stock market, whenever crashes happen, a good investor is always excited about them happening while they are building wealth, while they are starting to put money in the market. Because it is at that point when crashes are happening that while you are putting money in, you are gaining wealth because of the eventual rebound. Now, on the other hand, if you are in the phase where you are living off of your portfolio in what we call the drawdown phase, where you're pulling money to live off of every day, a crash can be a very scary thing. You must have a backup plan. So this is the first thing that we need to get straight.
The second thing is that historically, no one has been able to predict a crash. Now, there have been certain investors that have been credited with predicting, for example, the 2008 crash. But if you look at those same investors, they're always throwing out different dates of different crashes that are expected to come, and they never come. So if you are basing your investment plan off of news of certain predictions about when the crash is going to happen, you are basing your plan off of mere speculation.
The third point is that stock market crashes can happen very fast or they can happen very slow. And I'll give you a great example of this. Last year, March of 2020, we experienced one of the fastest crashes in the history of the stock market. Over a 22-day trading period, the stock market lost more than 30% of its value. Now that is considered a super fast crash. On the other hand, here's an example of a super long crash. January 11, 1973, when the S&P 500 took 373 days to fall 30%. 373 days to fall 30%. You don't even realize the crash is happening at that point. So on one end of the spectrum, you have a crash that takes 22 trading days. On the other hand, you have one that took 373 trading days.
And the last point, and we have said this before, but it is so important to mention, that historically, the stock market has always recovered from a crash. Now, I want to be clear about this because we talk about the stock market as a whole recovering. If you're investing in individual stocks, it's very possible that those individual companies can fall out, they can go bankrupt, and they may never recover. But if you are investing in the total stock market as a whole, for example, a total stock market index fund, that type of investment has always gone up in the long run.
So to the question, is this the start of a stock market crash? The absolute truth is no one knows. And if there is anyone telling you that they know that this is the start of the crash, if anyone is saying that, they are peddling fear. And when it comes to investing, the people that sell fear are really making money by selling that fear. They are selling clicks to their websites, views to their videos, or they're selling their services. So be very wary of anyone that is telling you that this is the start of a stock market crash.
So if that's our answer, that we cannot predict whether or not we are going to have a bigger crash, whether the stock market is going to recover tomorrow, what is the point of this video? Well, the point of this video is, again, demonstrating that at some point there is going to be a crash. It can be very quick or it can be a very long crash, but you always need to be prepared for that crash. So what we have now are 5 different things that you should do during a crash.
Our first tip to prepare yourself, and this is really a pet peeve of ours, is to decide whether or not you are an investor or you are a trader. You need to make up your mind in this regard. We get so many questions from people that are talking about trading their 401k, jumping in and out of stocks on a daily basis with their retirement accounts. If you are a trader, you are looking for short-term gains with all of this volatility. You're looking for 1 or 2 or maybe 5% every time the market makes a move on a daily basis. On the other hand, if you are a long-term investor, you are looking for long-term growth of your investments. A long-term investor experiences 1,000% return in Tesla because they've held it that entire time. You build wealth by consistently investing in the stock market over a long term so you can reap long-term growth of your assets.
The second tip is to beware of your emotion-driven reactions to the volatility in the stock market. A lot of people are so anxious during these dips and crashes that they tend to sell at a loss. And then as the stock market begins to recover, then they want to jump back into the stock market and buy as the stock market is going up. So they're buying stock once the prices go back up. This is the exact opposite of what you want to do when you're investing. But when you have that emotional component tied to your investments, that's how many people tend to invest. The exact wrong way that they should be investing. So be aware of your emotions during each crash.
Our next tip is to buy the dip. And you may have heard this before, but the concept is that when the stock market or an asset that you are following, if it's an individual stock, for example, when you see that asset fall to a certain point because the market is crashing, you go in with the extra money that you have on the sideline and you buy that asset. It is on sale. You are buying the dip. But, and this is a big but for us, if you are the type of person that is waiting on the sidelines with most of your money waiting for a dip in the stock market, you could be waiting for a very long time. Because studies have shown that the best way to grow wealth in the stock market is to put that money in as soon as possible. In other words, don't wait for a drawback in the stock market. Put your money to work as soon as possible because the longer it is in there, the longer it has to grow. So waiting for the dip, it's a wonderful thing if you happen to have money at that exact moment that is sitting on the sidelines. But in our opinion, the sooner you can get your money in the stock market, the better, regardless if there is a dip or not.
So the reality of this tip is that if you are buying at the dip, you are incorporating a level of market timing into your investment plan. Like Aman said, it's better to get your money in the market as soon as possible, but if you do have money sitting on the sideline As soon as that dip hits, then you can invest that money. The problem though is if you are really trying to market time, you may wait for another dip and another dip and another dip, and then all of a sudden you're too late, you don't get your money in, and then the market starts going up and up and up. So you have to be very careful with this type of strategy.
Our next tip is to diversify into other investments. We love investing in the stock market, but for us, it's not our only investment. You know that we also invest in real estate. And so for a lot of people, if you are building wealth by investing in the stock market, that means that all of your wealth may be tied to the winds of the stock market. And that is an all right strategy until the market crashes and you have to live off of that wealth that is tied up in the stock market. But if you have a diversified portfolio of other investments, stocks, bonds, crypto, real estate, whatever the case may be, you can switch over to those other assets when another is not doing as well.
And just to piggyback off of that a little bit, if you are investing in the stock market, you also want to make sure your investments within the stock market are also diverse. And then if you're only investing in the stock market, you want to have that strong emergency fund so that you can live off of that rather than pulling from your investments during that crash or the dip.
And our last and final tip is before you put $1 into the stock market, you must have an investment plan in place. An investment plan will save the day when these crashes come along. And we think that your investment plan, it doesn't have to be complex, but it should certainly be automated. It should not be a plan where you manually have to go into your account every single month and buy your assets. It should be something that is pre-set up, and those investments are automatically being made every single month. So that when volatility like this happens, you're not sitting at your computer looking at the stock market thinking, well, maybe I'll hold off on buying this month. No, you want to take the emotion out of your investment journey by automating your investments with an investment plan.
So we have a stock market investing course where we talk all about investing in the stock market, and we also provide an investment plan so that by the time you're done with a 4+ hour course, you have a complete investing plan to help guide you on your FIRE journey and help guide you during those dips and crashes in the market. So if you are interested in enrolling in the course, make sure you check that out. We will leave a link in the description below, or you can also go to our blog at ourrichjourney.com. But we really wanted to make this video for you because of the volatility in the market just recently. So much up and down, so many potential crashes that really there's no way to predict what the market is going to do. So we wanted to give you some food for thought to think about what you can do to help protect your portfolio in the event of a crash. So if you like this video, make sure you give us a thumbs up, subscribe to our channel, and
Join the journey.